Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. Real estate investment trusts, or REITs for short, took a beating in 2022 and for much of 2023. Over the past 2 years, the Federal Reserve has raised its key interest rates 11 times from range of near zero to range of between 5.25% and 5.50%. As we have noted several times at incomeinvestors.com and here in these videos, higher interest rates make it more expensive to borrow and service debt. And that cuts into profits. And REITs are known for their aggressive acquisition and strategies. While US interest rates are still at decades high, the Federal Reserve has said it's pretty much done with hikes for this cycle. And that interest rate could be coming in 2024. Suffice it to say, investors have been exceptionally bullish since early November. The biggest surprise may have been REIT sector. During the month, XLRE, an ETF that, considered a benchmark for REIT sector, has rallied 12.8%. It was just behind the famous technology ETF XLK, which advanced 12.9%. With inflation tamed, interest rates on decline, and the likelihood of soft economic lending, the outlook for REITs remained bullish for 2024. We have profiled a large number of REITs at incomeinvestors.com in 2023, and some of the best ones also happen to have some of the highest dividend yields. So John, let's just dig right into this. What's your first REIT pick for 2024?
Thanks, Mo. Yeah, there's a lot of great REITs to choose from. First one is Medical Properties Trust and trades on the New York Stock Exchange under ticker MPW. Why Medical Properties Trust? Well, people are rapidly aging around the world, and I don't see this trend reversing. That translates into an incredible demand for healthcare services from REITs such as Medical Properties Trust. Founded in 2003, Medical Properties Trust owns hospitals and other healthcare facilities in 31 U.S. states, 7 European countries, and South America. In total, it owns, I think it's 441 properties in 10 countries with a total worth around $19 billion. Medical Properties Trust Inc. Has actually paid a dividend for 19 consecutive years, but it actually cut its payout in the third quarter of 2023 by about 50% as the company continues to work on improving its operations and financial growth. Prior to this, though, the trust had actually hiked its dividend for 10 straight years. Medical Properties currently pays an annual distribution of 88 cents per share, or 18.14% on an annual basis.
I see that your pick number 2 is Global Net Lease with the current dividend yield of 15.36%.
Yeah, Global Net Lease Inc., which trades under the New York Stock Exchange under ticker GNL, is a diversified REIT that owns slightly over 1,300 properties in 11 countries, covering 66.8 million rentable square feet. And to put that number into perspective, that's like the equivalent of about 1,160 NFL football fields. Some of its 815 tenants include investment-grade organizations such as FedEx, Starbucks, Home Depot, Whirlpool, and the U.S. government. Global Net Lease has been paying a dividend since 2015. It started out with a monthly dividend, but it moved to a quarterly distribution in 2019. Currently pays a quarterly dividend of 0.354 per share for an annual payout of $1.42 per share. Yeah, and this works out to a yield of, as you previously said, 15.36%.
And what's your third top income REIT pick for 2024?
Generation Income Properties Inc. trades on the NASDAQ under ticker GIPR. As you might expect, it's a REIT that most investors are not familiar with. That's because it only went public in October 2021. The company operates in really the sweet spot of the real estate sector, and that's single-tenant retail, industrial, and office properties. Tampa-based, Florida-based company manages a diverse portfolio of retail, industrial, and office properties with lease terms that have less than, 10 years remaining on them. By purchasing shorter-term leases for investment-grade properties in higher density markets, Generation Income is able to provide above-market returns. Its diverse tenant base includes big names like 7-Eleven, Starbucks, Pratt & Whitney, and Dollar General. As for its dividend, Generation Income Properties provides a pretty reliable monthly dividend of 0.039 per unit, or 47 cents on an annual basis, and that works out to a current yield of 11.70%. Again, the company only went public in October 21, so it doesn't have a long, storied dividend history, but in the short term, it has never skipped a monthly payout.
Your fourth pick has a current dividend yield of 10.85%.
Yeah, Unity Group Inc. trades on the NASDAQ under ticker UNIT. It's a specialty REIT that acquires and constructs mission-critical communications infrastructure in the form of fiber optics, copper, and coaxial broadband networks. Some of its tenants include Verizon, AT&T, and T-Mobile, and its infrastructure assets are also leased to internet giants like Amazon and Alphabet. When most people think of tech stocks or companies that operate in the tech industry, they don't really think of high dividends. Fortunately, for a business to qualify as a REIT, though, it has to legally distribute 90% of its taxable income to shareholders as dividends. Early November, the company's board declared a quarterly cash distribution of 15 cents per share, or 60 cents per share on an annual basis, for a yield of, as you said, 10.85%. That's a massive return, especially when compared to technology giants like NVIDIA, that has a yield of 0.03%, and Microsoft that yields just 0.81%.
Your fifth REIT for income investors in 2024 is Service Properties Inc., and that has a current dividend yield of 9.46%.
Yeah, Service Property Inc. trades on the NASDAQ under ticker SVC, is a REIT with over $11 billion invested in two asset categories: hotels and service-focused retail net lease properties. As of September 30th, 2023, Service Properties owns 221 hotels with over 37,000 guest rooms. And you can find them throughout the US, Puerto Rico, and Canada, the majority of which are extended stay and select service. It also owns 761 service-focused net lease properties. And some of its tenants include brands that everyone's pretty much heard of: Burger King, Travel Centers of America, Kohl's Corp, KFC, and Taco Bell. Service Properties has been paying a dividend since 2005. Now, it suspended it once during the 2008-2009 financial crisis, which might not be a big surprise. But it has paid quarterly distribution without interruption since then, including through the 2020 health crisis. Though it did cut its payout in 2020, which shouldn't be a big surprise, it currently pays a quarterly dividend of 20 cents per share, or 80 cents on an annual basis, for a current yield of 9.46%.
Thank you so much for these 5 picks. REITs have turned bullish since November after the Federal Reserve held its key interest rate steady and said cuts to key lending rates would begin in 2024. While REIT stocks took a hit in 2022 and for most of 2023, the best REITs provided investors with the reliable inflation-crushing dividends. With the economic outlook more bullish for REITs in 2024, a recovery for REIT shares could be in the making. Historically speaking, REITs often outperform the broader market after the Fed tightening cycles ends. We saw this take place in November, with the XLRE ETF climbing 12.48%, and in the first 2 weeks of December, the same ETF has climbed over 7%. With the Federal Reserve at end of its set of rate hikes and cuts on the horizon, the best REITs look poised for outsized gains in 2024. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on our 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.